Welcome to another stage analysis video. It's Wednesday the 29th of November 2023. I'm going to do a special group focus video tonight on the gold and silver miners, starting off with having a look at what's going on with gold and silver themselves, as we've seen another potential stage 2 breakout attempt in gold this week. It's getting some volume coming into it as well, and some of the miners have started to follow through as well. So it would be an interesting area to focus in on, as it's been coming up in the watch list scans, and obviously we've been discussing it a bit on the blog post. So going back to starting off with the GLD, there's obviously multiple ways that you can look at gold itself through the physical gold, through the futures, for example, the gold futures on the COMEX. You can go to, obviously use the GLD as the PHY. Is it PHY? Just 1 second. PHY. Yeah, PHYS is what I was thinking of, which is the Sprout Physical Gold Trust. There's a bunch of other ones as well, but the GLD tends to have the largest volume. It doesn't track the physical precisely, but it tracks the US session of gold, and it's generally been the major ETF to track gold over the years. So at the moment, making a new stage 2 breakout attempt here. It did have a failed stage 4 breakdown attempt recently, so it rolled over, moved out into stage 2 earlier in the year. You can see back in January time here we started to move into, or even late December, started to attempt to move up into early stage 2. Had a sharp pullback initially back underneath the 10-week moving average, all the way back to the stage 2 breakout level before pushing back out again with a strong move in March. I think it was around the 13th of March when it broke back higher again, and we started to see the gold stocks etc running, and the silver stocks as well. Had another run back towards the previous highs before starting to fall back down again and turn into more of a stage 3 structure. So this stage 4 breakdown attempt recently only lasted for a few weeks, quickly reversed after springing for at the bottom of the downtrend channel here. See a sharp reversal move as obviously the geopolitical tensions and conflicts rose in the world. So we've had, obviously, this move has probably been kicked off with what's been happening recently with that, and then has followed through now with a new stage 2 breakout attempt. You can see relative strength versus the S&P 500 is still below the Mansfield zero line at the moment low. On a year-to-date basis, still a little bit underperforming in that regards. The S&P 500 has outperformed it on the last, in a 52-week basis there. If we look at the futures chart here, you can see this has got our stage analysis technical attributes indicator at the bottom, and as the background bands, the bands for this are, when it's green, it's in a score of 7 and above, which means a technically strong score. When it's red, it's a weak score of 3 and below, and blue, it's a more neutral 4 to 6 range. So at the moment you can see we're on a SATA score of 9, so it's in a very strong position here. You can see we've making a stage 2 breakout attempt this week, obviously pushing back towards the highs again, with the SATA score rising back up to a 9 here. So in a very strong potential position to continue on in stage 2 at the moment. If we look at silver on the other hand, you can see not quite broken out yet into stage 2. We're testing the top of the ranges here, recent swing highs. Has made a break above multiple swing highs that were from the smaller range within the channel here. So it has had a change of behavior, breaking this downtrend channel. Like gold, did break down to potential early stage 4 and quickly reversed and formed a Wyckoff spring and a test. Is now following through potentially, so we're looking for that sign of strength for it to move out and obviously push higher up into stage 2. So currently again below the Mansfield relative strength zero line, which is the 52-week RSMA. Silver divided by the S&P 500 there. So again, a little bit underperformance versus the S&P 500 on a 52-week basis. We go back through time on this one as well. You can see obviously it's gone through the 4 stages multiple times over the last 3 to 4 years here on the chart. So second time in potential stage 2 this year, but not quite there yet. Go back to the futures chart on this. You can see the SATA score on this one, slightly weaker than gold at a 7 currently. If it does start to clear above these pivots here, potentially could move to an 8 or a 9 there and start to turn back towards stage 2 again. But obviously been in a very choppy stage 3 range for a while now, so looking for this to make a continuation breakout and move up into stage 2 once more. We look on to the miners ETFs at the moment. So there's a few different mining ETFs. Some of the major ones, the GDX, GDXJ for the juniors, the SIL for silver miners, and SILJ. There's just a few of the mining ETFs that you can look at. But we'll use them as a proxy for what's going on here. There's about 50 or so stocks in the GDX, for example. And it's not just gold miners. Some of the gold miners include silver miners as well. So you can see at the moment, currently making a new breakout attempt here. Relative strength has been improving since mid-November here. So back above its 200-day moving average. If we look at it on the bigger ATR bands on here, just pushing up to the free ATR level for the first time in obviously the majority of this year. So let's go back a bit further, see if we got any. So it hasn't hit the free ATR level for the first time since back in March, when it was obviously strongly moving up in stage 2 there. So a little bit of a change of behaviour for this one in the near term, obviously showing that there's some strength in the gold miners currently. GDXJ, the juniors, similar kind of pattern. You can see we're breaking multiple near-term pivots here. If we look to the weekly chart on this, you can see just back above the 30-week moving average, which is still declining at the moment. So potentially breaking out here. Rental relative strength is still below the 0 line. If we go back to the daily chart, it is above the 200-day moving average. So this one would be a borderline case between potentially could be moving back towards stage 2, but a little bit of overhead resistance still here. And obviously with the 30-week moving average still declining, we wouldn't yet be considering it stage 2 as such. So need to see that start to turn up and round, potentially start to clear some near-term pivots. Silver X Global X Silver Miners ETF is one of the ways you can look at the silver mining stocks. There's obviously, as I said, another multiple ways to track the silver miners. Obviously, the best way through the individual stocks themselves, but if you're looking for a quick glance at them, SIL is a reasonable proxy. Again, back above its 200-day moving average. So starting to break above some near-term pivots here. If we look at it on the weekly chart, it's not as strong as the gold miners at the moment, but starting to recover back above its 30-week moving average, which is starting to turn, hasn't yet turned back up again. So again, needs a little bit more work in order to make a stage 2 breakout. But if it can start to clear these near-term pivots, then potentially could start to move back towards stage 2. Obviously some overhead resistance from earlier in the year. Same with the juniors, good recovery over the last few weeks, some real strength in the junior miners for the silver miners, but only just back into stage 1 potentially at the moment after obviously a spring attempt recently at the lows there. So from 4B minus back to potentially stage 1, so a bit more work in order for this to recover back into stage 2. But you can see on the ATR levels here, back to the free ATR level, which hasn't touched again since back in July, which it did briefly when it got above the 200-day moving average for a few days there. So obviously near term sign of strength, but we need to see some follow through in this. A bit of a obviously double bottom pattern going on at the moment. If we move on to obviously the year-to-date strength of these ETFs and gold and silver themselves. So you can see this is versus the S&P 500. So if we just quickly, if I can get that, just pull it up a little bit, see that a bit better. So look at the actual year to date. So S&P 500 currently at 18.52%. Gold is only at 11.73%. Silver at 3.91%. The gold miners at just under 9%, and the silver miners at almost minus 2%. So we go back to the line charts here. The one way that you can use this in stock charts with the perf charts is if you have the S&P 500 up on chart, as we use the S&P 500 as our proxy for the Mansfield relative strength indicator. Everything is relative to that. So if you click on that, you then create that as a flat line, and then you can create, this is a Mansfield relative strength indicator for obviously everything that's relative to it. So for the Mansfield relative strength indicator, we use a 52-week moving average, which on a daily chart equals 252 trading days. This is 252 in a year. So we need to obviously pull that out, and then you can see obviously the Mansfield relative strength for all of these ETFs versus the S&P 500 at once. So at the moment, you can see gold is just starting to break above here potentially. We've got silver also in line with just a little bit better and starting to outperform in the near term, but basically in line with what's going on with the S&P 500 there. So if we go back to these, go back to the year-to-date figure, as I said, still been underperforming year-to-date versus the S&P 500, but you can see there's definitely been a trend over the last 2 months here, obviously, of outperformance starting to recover versus the market.